All right, you're welcome to Ben Television, and the program is Dialogue in Diaspora business segment. This beautiful Monday afternoon. My name is Tunde Alabi. It's a pleasure to have you join us on the program today. Today on the show, we'll be taking a look at investment strategies. More specifically, we'll be going into the areas of property and, of course, housing. But of course, my guest today is versed in quite a number of investment areas, but he's a specialist in investing in real estate. However, let me bring my guest to you, Godwin Okre. Godwin Okre is a barrister and an investment strategist. He used to work for a couple of banks dealing in repossession of properties across the world, not only in the United Kingdom, but also got clients even in the United States of America. Godwin, thank you for being part of the program today.
Pleasure.
I should quickly add that Godwin is also an author. He has authored a couple of books highlighting investment strategies in real estate, especially within the UK housing sector. Godwin, thank you for being part of the program today.
Thank you.
Can I just ask you to tell us a little bit about yourself? My viewers may probably want to meet you.
Yes, well, you're quite right. I'm Godwin Okre. I'm a lawyer. I'm a writer, and also a supporter of a famous football club that you may not support. So yes, I started out being a barrister. I then converted and became a solicitor and came back into the bar. And of course, I'm now fascinated by property investment. I think it's an area that people could benefit from. So in a nutshell, that's what it is. I have 4 children, I'm married, and it's fantastic.
Well, while you were a barrister and then acting in those capacities, you were working with some financial institutions. What were you doing?
Well, you know, when I was running my practice, I used to do a lot of repossessed properties for the banks. For instance, I used to be the one to go into court and do repossessions. And in that capacity, I was able to come into contact with a lot of asset managers. And that pretty much opened the door for me to understanding the way in which you could buy properties. And this would be a benefit for your viewers today. I'm sure during the course of today, you will give me the opportunity to tell them about the opportunities they will be able to benefit from in the UK and, of course, in the US.
While you were doing your job at the time, going to court, give for a position, what were the things you were doing at that point? What was it like?
Well, it was a little sad because I've had the opportunity to speak to defendants, and I say to them in court, how did it come to this? Why did you lose your property? What exactly has happened? And I find that there is a common thread that runs across, which is that they've not been properly advised on how to invest in properties. They've not been advised on how to form a business. They've not been advised on how to run a business, and that became a common thread across.
Well, what does running a business or advice on running a business got to do with you possessing somebody's home?
well, it has
repossessing somebody's house.
I didn't repossess it. It's a bank.
For the bank.
It's a bank that repossessed, and of course they instruct lawyers like myself or other lawyers at the time to go into court and
get a case on their behalf. Get
an order from the court of possession. So I'm not a man that repossesses. I just simply am the vehicle to do it. So
I know.
I hope your viewers wouldn't say
Of course, they will understand.
Yeah. But it's to answer your question, and I think it's a rather poignant question. It's not a nice thing when you repossess a property, but that's the consequence of an economic situation where you fail to plan properly. If it's not repossession today, it is losing your business tomorrow or in debt the other time for a bad decision. So if you make the wrong decision or a non-decision, there would be consequences. And that's why it's important that people, and this vehicle, for instance, is an opportunity for people to learn on how to do these things.
How do people make a wrong decision about buying a house? Buying a house is everybody's dream. How could that be a wrong decision that could lead to a repossession?
Well, for instance, if you leverage so highly, and by leverage I mean if you take a mortgage to the hilt and you're having to pay more than you receive in rental income, that's a recipe for disaster. I'll give you an example. If, for example, a property is going for £200,000 and you take a mortgage of £180,000 and say the rent is £700 a month, just for example, and your mortgage is £800, in real terms, what you've done in real terms is you're paying more than you're receiving. You're getting £700 and you're paying £800. The shortfall, you have to look for it from somewhere. And that begins to be a recipe for disaster. The same runs across a business. If you are looking to form a company and you fail to carry out proper research and you spend money in building up this company and you're not getting income, but your expenditure exceeds your income, you could juxtapose that in the same way as buying a property where you're paying mortgages more than the rent. It's a recipe for disaster. So all I am saying is it's important, whilst investment is fascinating, is the fastest way to gain wealth. And of course, if you look at, there are copious examples in the papers, and I'm going to show you a number of papers today where they've said it. In Forbes magazine, you see that the millionaires and the billionaires are people who are not employed, but people who are business people or investors. That's how you become a billionaire, and that's how you become wealth. Wealth building is all about finding your niche market and building it up in a sensible and economic way.
In the process of finding your niche market and trying to build it up, are there strategies that one must consider?
Oh, there's a great deal of strategies.
Investment strategies you need, places you need to look into, what you need to put on the table, things you need to consider as you step out into the entrepreneurial world.
Well, there were a lot of, that's a rather broad question, but I'll try and break it down to sensible portions. If we talk about, for example, you want to run a corner shop in a part of Deptford, and you want to form a business in a way that is different from every other business, you have to carry out your research on your field. One strategy is proper research. That's all I'm saying. Research your market first. Once you've researched your market, you're on the path of success. What I find with a number of my not my client, but a number of people who've come to instruct me, is that a lot of them have gone into business without doing proper research. They've said, my friend is doing it and is doing the business, and therefore I have to do it. It doesn't work that way. You have to have a niche. You have to have a smell. It's like a striker in a football club who's got to smell for goal, who knows to bang in the goals. You have to have a way. You have to understand the angle in which you're going to go into the market. If you don't do that, if you don't do your research properly, you don't have an angle, it's not a way to go. So strategy, first of all, is research your market first. Research.
Okay. Now, everybody will say, I've done my research and now I'm going to succeed in this. But I haven't got the money. You haven't taken instructions on behalf of couple of financial institutions. Are there strategies, specific strategies you would rather want to advise someone? These are ways you can source fund, raise capital to finance your businesses.
Well, yes. Well, it depends on the kind of business you want to go into. But there are a number of ways out there for your listeners to source for funds. A number of myriad ways. One of them is called joint venture. A joint venture, in real term, is you could partner with someone who's got money. You draft a partnership agreement under the Partnership Act of 1890, and you then say, I'll be the person doing the business and you be the financier, a private financier for that business. You draft a partnership agreement, you do a fee sharing. In one of the clauses of the contract, you work out your fee sharing agreement as to how much you're going to pay, whether he will share in the profit or share in the sale of the business. That's one avenue, joint venture. Another avenue is bank loans. A number of banks at the moment are doing some loans where the interest rate is relatively low. As you know, the Bank of England rate, the base rate now is 0.5, is the lowest it has been. And if you look at the LIBOR rate is the rate between which the banks lend money to each other. The LIBOR rate is also not very high because it reflects the base rate at the Bank of England. So the interest rates are not very high. So if you're a good chap and you speak to your bank manager, you get good loans with good rates, provided you've researched your market. You don't want to go and take a loan for a market for which you've not researched. That, again, would be a recipe for disaster. But businesses and investment in properties is the way to go, not employment.
Mm. Okay, now let's look at the most common disaster people get into.
Yeah.
They start a business, in 2 years, it's folded up. Why?
I'm sorry, I didn't catch that.
People start a business now, and in 2 years, the business is gone.
By gone, you mean it's gone into administration,
yes,
sequestration, bankruptcy, and all the rest of it. Well, it's all because of that. Even if you form a company or a business, you do your research properly, you get a bank loan, and you're up and running. You have to have a good administrative system. You have to keep it going. Think long term. Think 5, 10, 15 years. Understand your market. It is those long-term planning that would sustain your business. Think about your income tax, corporation tax, the number of employees you're going to employ. You could start with 1 employee and build up and factor in the cost all of that will have. So make sure that your income exceeds your expenditure and just grow your business. It's that simple.
I suppose you are of an African origin.
I most certainly am, yes, from the Okri clan, absolutely.
All right. You must have actually noticed the African enterprises.
Yes, of course.
Within London and the rest of other British territories. Very much of it, we're not doing very too well. We hardly trade with one another. Do you see why we have African entrepreneurs have challenges building their businesses, expanding their business? I'm not even talking about going to the British High Street now. We're going to come to that. What challenges in the course of doing your business, meeting people, do you think the African black people in the UK have got in really digging deep into the business climate in the UK?
The number of black businesses that has failed is astronomical. If you look at the statistics, it doesn't make for a good reading. And I feel that the reason why that is they have not, apart from the research of their market, they don't educate, we don't read. You have to read books. You have to expand the mind. You know, I give a lot of seminars. I do a lot of seminars. I've done seminars in Ghana, in Nigeria. We did in America. We're going to Australia next, after my book launch, which I'll talk about a bit later on. And I find that people who succeed are those who read, because you expand your mind. You know, you research your market, you go to seminars, attend seminars, go to join investment clubs, you know, go out, meet other business people, go for business lunch, join the Small Business Association, you know, and mingle with people and see how other businesses are run, you know, what other business people say. That way it buffers you. We don't do that. And that's one of the reasons, out of so many reasons. That is not to say that they are not successful black businesses. I don't want to call names on but there are some successful black businesses, and they're doing extremely well. There are black law firms doing well, there are black restaurants doing well, estate agencies doing well, quite a number. But you're quite right, it's not as much as we would like to see, as it were.
Okay, let me quickly inform you on that note that come on the 9th of December, Ben Television and its other partners are joining the London Stock Exchange to promote African Financial and Investment Summit at the London Stock Exchange also joining in is African Partnership Development. So on the 9th of December, exactly 4 p.m., we will be at the London Stock Exchange. If you're watching this program, you have an investment in the UK, or you're looking to invest in Africa with specific reference to Nigeria and South Africa, you're looking for somebody to connect with, you want to mingle, you want to interact, you want to network, you want to understand and know the policies of investment in those two countries, reference to Nigeria and South Africa. You want to understand the nitty-gritty of taking your money into Nigeria and coming out of it with some profit. You want to meet with political policy and decision maker. You want to interact with investors, and of course people who have investment in oil and gas, in telecommunication, in the financial services, in real estate, like Michael Cree, who is going to be there. You just need to put this date on your calendar on the 9th of December at the London Stock Exchange. There will be no better place for you to be on the 9th of December than the London Stock Exchange by 4 p.m. You want to be part of it, just send an email to admin@bentelevision.com, admin@bentelevision.com. We'll find you your ticket. It's a free to enter event, but you want to be part of it, send an email to admin@bentelevision.com, and we'll see what we can do. Just target London Stock Exchange December 9, and we'll find something to do. Mingle, interact, and then you might be creating a buffer, like Mike Okri had said, around your investment and property, and then you might be able to grow. Now, Gordon, let's look at circumstances around real estate.
Yeah.
Say housing sector. I mean, it's no longer news that there is a whole lot of challenges with the housing sectors in the United Kingdom.
Yes.
And that is an avenue for investment. Do you agree?
Well, in the housing sector?
Yeah.
What do you mean by housing sector? I'm not sure.
The housing sector, building and letting and stuff like that.
Well, if you want to be a property developer, in other words, going and building properties from scratch, if that is what you mean by housing sector, that's a market. But one has to be very careful, because you have to look at different kind of investors. There are some people who do not have that expertise. It's best to go into that kind of work if you have an expert in building from the scratch. But that's an avenue. If you could do it, there's a massive amount of profit. But you have to go through, you have to get your planning permission, you have to have a land, and that land must be susceptible to planning permission. If you could do that, your markup is great indeed. So yes, you're right. If you look, for example, the OECD said last year that the number of house building is not meeting up to the demand of the population. Let us look at the figures. In 2014, the population in England and Wales is 64.6 million people. In 2011, it was 56 million. So the population has gone up by 8.5 million. There's always going to be a demand for properties. You could just see the numbers, and that numbers come out of the Office of National Statistics. Your viewers could go on Google Office of National Statistics, look at population, and they'll see the trend. So there's always going to be a demand for properties.
Okay, now let's look at, people who haven't got the expertise in either building, haven't got the financial resources, but they want to engage in real estate and lettings, like the kind of business you do within that sector. What is it like going into that sector?
Well, coming into property investment is the fastest way to make money. You do not have to have any kind of expertise like running a business, but you have to have the niche of being able to calculate the kind of profit that you want. It's that simple. Properties in the UK has become, the London market right now has overtaken New York. If you look at the Financial Times, I think it was last week, they looked at the comparison, and there was no comparison. England has taken over America in terms of investment. England is hot cake right now. And of course, the population, I've given you the statistics, the population is increasing. There's always going to be a demand for property. So there are a variety of ways in which people could get into properties. In my book, I'm sure you're going to refer to it, you could buy properties with no monies down. You could have £10,000 and buy a property for 500,000. There's strategies that is available that I've set out in my book that you could use. There are a variety of ways you could buy properties, and buy it, put tenants in, wait for the value to go up, sell and make a profit. It's that simple. It's that simple.
Okay, let's take this one after the other. I do understand, and I'm very, very much aware that Godwin Okri does have a book that's set to be launched sometime soon.
Yes,
but let's extract this book a little bit, which is a compilation of your experience in and outside the field, both as a man who goes to court to arrange repossession. Let's look at wanting to... I'm a landlord.
Yes.
And I've got property just sitting down there. I don't know what I'm doing, what I want to do with it. How will you, in your own terms, describe me? I've got a property worth 250,000 somewhere in London.
Yes.
No mortgage on it. It's just sitting down there. But I've got tenants in there giving me bits of some rents.
Well, if you have a... Well, it's not a sensible way to invest, sir. If you have a property unencumbered, in other words, with no mortgage, I don't know what rent you're getting. I don't know if it's 2 or 3 bedrooms.
I'm just using myself as a case study. I'm not that person.
Yes, but
Just say.
Yes, but assuming you have a property of say £250,000, there is no mortgage, and you have a tenant paying £1,000. What you should do is remortgage that property, pull some money out, not too much. Don't remortgage too high. Remortgage in such a way that the rent would cover the mortgage, the monthly mortgage payment. Pull out that money and invest another property unencumbered. Now, the trick is this. You pull out some money and move to places like Manchester.
Like
you could pull out 75, 80,000 pounds, 90,000 pounds, and go to Manchester, Leeds, Liverpool. Those are areas that are coming up. It's not, arguably now, Manchester is now the second city after London.
Is there any crime also reinvesting within the London territories?
Well, you could invest in London, but at 75 or 80 or 90,000 pounds, you would not be able to buy a property unencumbered. In other words, you will not be able to buy a property without a mortgage. Okay. But I try and encourage people, if you can, to try and reduce your mortgage exposure, because in the likely event that the interest rate do go up, and it will, I know that the inflation rate now is 0.0. It's gone into, well, practically there's a deflation right now, because if you look at the CPI, it's 0. But the moment interest rates start going up, the MPC at the Bank of England will think about increasing interest rate. They will hike up interest rate, and guess what's going to happen to your mortgage payment? The mortgage that you pay would go up. So you don't want to expose yourself too much to that possibility. And that's why I say to people who's got property where the mortgage is almost practically paid off, take some money out, not too much, and go to places like Manchester and buy unencumbered with no mortgage. So you have 2 properties bringing in rental income. All right? So you bring in rental income, and that extra income is your wealth creation. I said in my book, there are 4 pillars of financial empowerment. There are 4 pillars of wealth creation. One of that pillar is the ability to invest in property in such a way that the capital appreciation and the yield that it brings is your wealth creation. And that's why people are people who invest sensibly, and that's why they are rich, because they understand the market. They know how to tweak the market. You see? So that's the trick.
Okay, all right. Now let's look at somebody who is relatively very exposed to mortgage. Say, refinancing that property of 250,000 and maybe worth another 350,000.
Yes.
And then pulling out the money and then getting 2-3 more other properties. Would that make some sense? Well,
it does make sense, but you see, I'm an advocate. I mean, in my book, I mentioned the quantum philosophy of investing. And it sounds grand, but it's so simplified. That was deducted from the quantum theory. And the quantum theory simply says that if you invest in the simplest of things, when it grows, the growth is your profit. Did you remember 15 years, 20 years ago, you could buy property in London below 100,000. In Plumstead, where my office was, you could buy a property for 80, 90,000 pounds. Imagine if you have 10 of those now. They're now worth 300,000, 400,000 pounds. That's what I mean. So you go into a virgin market that's about to take off. You then use the quantum theory and buy in that market and position yourself. Once the market then pick up, sell and make a profit. That's how millionaires are made. They're not made in sitting in your hacienda drinking coffee. It is going out there looking for deals. And that's what we bring.
But are there any challenges in such strategy?
Well, no. I mean, in my book, I mentioned a variety of...
You said it's not really good to expose oneself to too much mortgage. If you're buying 3 property, of course, you're exposing the other property that has yielded that refinance into some misfortune if care is not taken.
No, you're not. No, you're not. If you have a property of, say, using your example, 250,000, and it has increased in value to 300,000. That's your example you've given.
Yeah.
And so the appreciation has gone up by 100,000. What you do is you pull out 90 or 100,000 from that property. Pull out 100,000. If you're getting £1,000, it would cover your mortgage. Your mortgage, if you take 100,000 at 4.6%, you'll be paying about £280 mortgage, and you're getting £1,000. You're having £800 profit, plus the 90,000 you've drawn out of the property. Then go to Manchester and buy a whole house unencumbered, no mortgage.
I still want to have a mortgage.
If you
I want to spread the 90,000.
Well, I advise
over 3 properties. That's what I said.
Yes, if you
exposing yourself to mortgages.
Well, if you want to,
so now invest this 90,000 into 2 more properties.
Well, then what you could do,
leveraging on.
You could leverage, absolutely. What you could do is, instead of buying the 90,000 outright, you could buy £45,000. You could put 45,000, take a mortgage of 45,000 for one, and then the other 45, take another mortgage for the other. The rent will still cover the mortgage. That's my point. That's a quantum theory. It covers you because you don't want to invest. You don't want to leverage to the hilt, because once interest rates, and it will be high.
So on that single property, I can have 3 other properties leveraging.
But you have to go outside London and invest intelligently.
I don't want to go outside London.
You have to. You have to think that way. I gave a seminar in St. Louis, Missouri. This was going back in 2011. And one of the chap who asked the question was a similar question. He said, look, Mr. Okri, well, he was speaking with an American accent. And he says, look, I want to leverage, I want to buy this. I says, look, the danger with leveraging is that it could be compared to crossing the road without looking right or left. You do not know what's coming on the corner. If the coast is not clear, you cannot take that risk. I call this defensive investment, because I do a lot of repossessions and I've seen the nasty part of it. So you have to buy property intelligently. Look at your yield. Look at the kind of rent you're going to get. That's what you do. Research your market. London is a great place to buy, but the prices are so high. And in my book, I refer to it as the yield curve. The yield curve argues that the higher the price, the lower your yield. And the lower the price, the higher your yield. Because if I buy a property of 90,000 and I'm getting £800, my yield is high. If I buy a property of 300,000 and my rent is £1,000, my yield is low. So you have a low yield in London, but a high capital appreciation. But you have a high yield outside London, but a low capital appreciation. So you choose what you want. Do you want capital appreciation or do you want yield? That's the argument.
All right, if you're watching this program, would you prefer a yield appreciation or capital appreciation? We'll go on a very short break now, and when we return from that break, Gordon Okri is still in the house. We're still talking about investment strategies, and we're looking at real estate investment. Gordon Okri is an expert and, of course, an investor in that area. When we come back, we'll be taking a look at one of his books, in fact, his latest book, which he did call Investing in Property with Strategy. Investing in Property with Strategy. We'll be looking at some of the strategies outlined in that book. Let's go on the very short break. We'll be back. Don't go away.
in diaspora have asked for this. We are delighted to have delivered. But yet, there are more to be done.
Keywrite, specializing in all aspects of property lettings and management. If you have a property, tenanted or empty, contact Keywrite on 0208 808 5789, where you'll be sure of expertise, competitive pricing and first-class service. Visit www.keywrite.co.uk. Telephone 0208 808 5789. Keywrite, the right key for your property investment.
Okay, you got Ben.
Yes, you're welcome back from that break. Excuse me. Now, I've got Gordon here, and we're looking at investing in property. He's got a book called Investing in Property with Strategy. Excuse me. Gordon, let's look at this book. We might go on a very short break any moment from now as well, as we take a look at this book. But let me quickly go on this break. I'll be back, and so that Gordon will take us through this book. Let's quickly check out this break. I'll be back.
It is a celebration of those who are doing wonderful thing on the African continent and fully focused as well on the Nigerian sporting industry.
Those in diaspora have asked for this. We are delighted to have delivered. But yet, there are more to be done.
All right, welcome back from that break. I still have Godwin Okri in there. Godwin, you have a book, Investing in Property with Strategy. What is that book all about? Anyway, that book is yet to be out there, but let's quickly review this book, and then we'll talk about the launch.
Yes.
What is the book all about?
The book is entitled Investing in Property with Strategy. It's about encouraging people to invest in a certain way. There's a certain way in which you could buy properties with no monies down. There are strategies in which you could invest in properties.
Can we look at that briefly?
Yes, let me just list what the book is about, and then we'll go. First of all, the book is written for first-time buyers and for existing investors. Okay, for first-time buyers, it tells you how to invest in properties with no monies down. It also tells you how to, if you have £10,000, you could buy a property of £500,000. It gives you the strategy to do that. For existing investor, it tells you how to buy properties at low mortgage rate. It gives you all those strategies. So both for first-time buyers and existing buyers, it is an all-encompassing book. Yes.
Now, as a first-time buyer, how do I buy a property without no money?
Well, it's there in the book. I've set out the strategy. There are ways in which you could buy properties with no monies down. It's lawful. As a lawyer, I can't say anything which is unlawful. It's very lawful. There are various ways in which you could buy properties. You could buy properties with no monies down. There are various ways in which you could source properties, expensive properties, for cheap. In the book, I've given websites where you could find list of properties of buyers who are emigrating, divorce sellers, repossessed, where you could get repossessed properties, where you could get properties with distressed properties, and where you could buy properties that has legal problems. There are some properties that are not properly registered. There are some properties that are not properly registered, and buyers have problems with those. And you could buy those properties at relatively cheaply, have your lawyer to rectify the problem, and you have an expensive property. So you buy cheap and you sell high. All of that are set out in the book.
I see that you're trying to avoid releasing bits of these strategies. It's just say, I've got. Anyway, when is the book going to be out?
Well, we're launching it on the 26th of November this year at the British Library. It starts at 5:30 p.m. So the 26th, Thursday, the 26th of November, the British Library, we're going to launch the book, Investing in Property with Strategy. I understand Ben TV is coming. We're going to welcome you.
Yes,
it's going to be a fantastic day. Do turn up. I'd like your listeners to turn up, particularly those who are looking to find out more about properties. I'll give you a number of talk on a variety of ways in which you could buy properties, and it's all there.
Okay. So is the book out now?
The book is out, yes. The book is out, and that's the book. It's called Investing in Property with Strategy. You can get it in any of the bookshops. It's on Amazon, Kindle. I think my publishers advertise it at £4.99. I mean, and you could buy it on Amazon proper at £6.99, or you could go to www.quantumleapproperty.com. quantumleapproperty.com. There you could buy it at £5.
Okay, all right. And so the launch is coming up on the 26th of November at the British Library. What are the things, if any of my viewers are interested in coming, what are the possible things they will be getting?
Well, if you come on the day, there are a lot of other investors who will be there. The media will be there. It's going to be a day to mingle. It's a book launch, but it's a day to socialize. There's going to be, for those who drink wine, there's wine. I don't drink wine. For those who want soft drink, I know Tunde doesn't drink wine. They're there to mingle. There are going to be a number of publishers, authors who've written books on properties, not just myself. Although I'm launching my book, but I've invited other publishers. So there will be opportunities for people to ask questions. I've got disc I'm going to give on property. One of the discs, I think I sent it to your secretary, the animation disc.
Okay, yeah.
Yeah, so they're going to have a disc on property, how to, step by step. They'll have that. There'll be handouts I'm going to give for free. The entrance is free. There's going to be light refreshment and time to take questions. If you have any questions you want to ask me on the day, I'll be quite happy to take
One
questions.
of the questions I want to ask prior to that, which I want you to give me an answer now. How do I buy a property with no money?
Well, you have to read the book. It's
Goddy, come on.
It's in the book. Why say, in legal terms, why say something which is implied when it is expressed? It's expressed in the book. Pick the book, read it. I mean, you're a multi-millionaire, buy it. It's for you, it's £5. In fact, it'll be £10 for you. Just buy the book and read it, and you find it all there.
All right, I've been speaking with Godwin Okri, and we've been looking at investing in property with strategy. And so on the 26th of November at the British Library, Godwin will be there. And also do not forget, on the 9th of December, Ben Television and its other partners will be at the London Stock Exchange, where we'll be talking about African Financial and Investment Review. We're bringing in policy and decision makers in investment matters from Nigeria and South Africa. We're bringing in investors from around the world, British and African entrepreneurs. We'll be bringing them in to the London Stock Exchange with the support. We'll be looking at investment in different areas such as the telecommunication, the financial services, oil and gas, and solid mineral. Of course, it's no longer news that the world economy is going through some distress at the moment, and it only requires a smart mind to be able to leverage on that situation, so that when the economy does pick up, you have a kind of opportunity, an upper hand to make some money for yourself. Put that on a diary on the 9th of December. But while we are also looking to join Godwin Okri on the 26th of November at the British Library. Godwin, you've not paid me for this, but you want me to pay for your book. That's not balanced.
Well,
tell me, how do I buy property with no money?
Okay. A 19th century neoclassical economist once said that if you have a product, try and sell it. And so I'm going to comply with that instructions. If you want more information, buy the book.
You see, the way lawyers behave, they go right, they go left, they come back to the question, and then they parry the question again.
It's there. I mean, there are strategies in which you could buy properties with no monies down. There are strategies in which you could even get buyers who would beg you to buy their properties. You need to know where to look, and where you need to look is set out in the book. The book is 126 pages long. Did you know what? I wrote the book, I finished the book and I rewrote it to simplify it. The reason why I've done that is because I want to take into account all my readers, both the intellectuals and the non-intellectuals, to be able to understand the book. It's written in simple English with copious examples. I've got graphs and statistics from the Office of National Statistics. I've got all those figures that you need. It's all there. Let me give you one statistics. Did you know that in 2002, the average price in England and Wales, the average price was £134,000. Did you know that? Fast forward 2012, the average price has gone up to 250,000. In 10 years, price had gone up 100,000. The figures are there in the book. So I do not just give you the statistics. I also give you the way in which you could make money in properties. I've kept it simple. It's the first book in history that has used the quantum theory to explain to people how to invest in property. It's been simplified.
I've got £10,000. I need to buy a property. How do I go about it?
Well, if you have £10,000, the book shows you where you need to look to find.
Why do you keep making reference to the book?
Because it's there.
Because it's your book.
Okay, there is a website. There is a website you could go to today where you could find, even in England, even in London.
I thought you said you're a lawyer.
I am indeed, yes.
But you're talking like a businessman.
Well, I'm a business lawyer. The point is, no, really, the point is that in the book, there are websites I have pointed out to my readers where you could go to and find properties in London being sold below market value. You need to know where to look and how to look. Did you know that one of my clients read this book? He's going to come at the book launch, and I'm going to get him to speak, and he will bring his title deed. I've told him, people don't believe you. If they don't see evidence, they don't believe what you have to say. It's simple. Bring your title deed. Bring the property that you've bought. I pointed where I pointed you to in the website that you've bought. Bring the title deed and show the evidence when you sold it, and show people the profit. We bought somewhere in southeast London for 120. The street is going for 280,000. He bought for £120,000. He bought £100,000 below market value and sold at about 310. And of course, he's going to account to the taxman for his profit. But he made a profit. You need to know where to look. That's why I've seen people lose. You know me as a lawyer. I've done repossession. I've seen people lose their properties in repossession because they've not been advised properly, which is one of the reasons why I have written this book. People have been misled. They've been encouraged to take mortgages up to the hilt. That's a risk. I cannot emphasize it enough. You've got to be careful how you buy. Don't remortgage to the hilt. In 2014, the Tory party introduced the mortgage market review, which is the affordability test. What that means is stress test the kind of whether you're able to buy a property, is stress test your income. They're going to stress test you and see whether you have the money. The reason why they've done that was because banks were lending out recklessly. You see, and that's why we had a flood of repossession. Although I benefited from it, but that's a matter for another day. But the point is that it's being able to know how to buy, and that's the reason why I've written the book.
All right, this is how far we can go on the program. This afternoon Business Day program. My guest has been Gordon Okri, barrister and investment strategist, and who has specialty in property, having worked with a couple of financial institutions represented them in court on repossession, and all this he has put together in a book that is called Investing in Property with Strategy, and he'll be launching the book on the 26th of November at the British Library, while we also will be at the London Stock Exchange on the 9th of December, 4 p.m. exactly. We're talking investment, and there will be investors, entrepreneurs, policy and decision makers, people who impact and affect day-to-day life across Britain and indeed Nigeria and South Africa at the London Stock Exchange on the 9th of December. To put that date in your calendar, 4 p.m. If you are interested in joining, you can call or you can send an email to Ben Television, admin at Ben Television, title London Stock Exchange 2015 invite. Thanks so much. If I can go, my name is Tunde Alabi. Thank you for being part of the program
pleasure.
today. Your last take on the show before we go.
I'm sorry?
Your last take on the show before we go.
Well, you know, I've said a great deal. I think, you know, investment in property is the best way to go. Come on the day on the 26th of November, and then you'll be blessed. The book, Invested in Property and Strategy, could be obtained in Amazon.
He has been very unfair to me. He hasn't paid to come and advertise himself, but he's asking me to pay £6 for his book. What should I do? Give me a call, and I will follow your advice. Even though he's a lawyer, I've got to take him to the People's Court. My name is Tunde Alabi. Do have a very good afternoon, and see you.